Good morning and welcome to the TRISTEL PLC preliminary results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Liz Dixon, CFO. Good morning.
Good morning and hello everybody. Welcome to TriStel's preliminary results presentation. So these are our June 23 results. I'm joined in the room by Paul Swinney, our CEO, and also Heidi Allard, our Chief Financial Controller. And they will both join for questions later on, but I'll just lead us through the presentation. So for those of you who don't know the business, TriStel is an infection prevention company. We focus entirely upon the hospital, and we have a unique proposition, which is our chlorine dioxide proprietary formulation, which we use to decontaminate both medical devices and disinfect surfaces. We have a very simple product. We're very focused upon the hospital, and this is a global opportunity which we are addressing. Our products can be used for multiple applications around the hospital. The TriStel branded product range focuses upon medical devices, and within the hospital there are numerous departments that our products are used within, and we list on this slide the medical devices that are appropriate for decontamination by chlorine dioxide. These medical devices have the unique properties of being heat sensitive and made of plastics and polymers, which means they can't be sterilized. But the type of pathogens that cause risk to patients mean that they must be disinfected to the highest possible level between use. The departments that we address are those in which invasive ultrasound probes are used, so the probes that go into the various orifices of the body, transvaginal ultrasound probes, transrectal, and also skin surface ultrasound probes. And these probes account for the largest proportion of our medical device revenues. We also use our chemistry to decontaminate echocardio probes, which are used within cardiology departments within hospitals, ENT nasendoscopes, and various other pieces of medical equipment that contain cameras or electronics or plastics that are listed here that make up the remainder of our medical device revenues. We are currently the global market leader in manual high-level decontamination or disinfection of medical devices. So our products are applied by hand. They come in the form of a wipe or a foam, and we compete in this market with machines, pieces of equipment into which you can place these medical devices for disinfection. But our products are unique in the fact that the chemistry is applied by hand. And why do we do that? Well, we do it because chlorine dioxide is such a safe molecule. It can be handled, it can be used within the breathing zone, whereas the types of chemistries used in other in machines are noxious, and so they need to be contained within a box to protect the nurse or the physician who is carrying out the decontamination process. But as a consequence, our products are mobile. They can be carried around the hospital. We don't have to take the medical device into a room where a box or a washing machine or a cabinet is located in order to disinfect it or decontaminate it. Our products can be used anywhere. Can be used in the field, can be used in a department, can be used in an ambulance, and as a consequence, they are extremely flexible and provide a real alternative, a true competitive edge against fixed installations of machinery. The chemical chlorine dioxide is also very suitable for the disinfection of medical surfaces. And we list here some of the areas, the surfaces within a hospital where dangerous pathogens can lurk. They are high-touch surfaces, and where you have immune-compromised patients, or basically anyone who is sick within a hospital, then you want to make sure that they don't acquire an infection whilst in the hospital from one of these surfaces. So mattresses, IV poles, trolleys, commodes, and so on. These are the areas that our products are used to disinfect. This is a much smaller element of our revenue, but it has the potential to rival our medical device decontamination products in terms of value over time. So the financial year that we're reporting upon is the year to 30th of June 23. We achieved a 16% growth in turnover, up to 36 million. And that's after, in our comparable period, we had a number of products which we discontinued. So looking at continuing products, we achieved 22% growth from compared to the prior year. Overseas sales grew by 17%, up to 23.5 million, and we address our overseas markets via 14 wholly owned subsidiaries and some 35 third-party distributors, that many of whom we've been working with for over a decade. Our gross margin was relatively steady, increased very slightly up to 81%. We achieved an adjusted EBITDA margin of 25% and adjusted pre-tax profit of 6.2 million compared to 4.5 million the year before. And we adjust for share-based payments each year. We have an all-staff share option scheme, which we issue shares to all of our staff to gain a company ethos aligned to shareholders. But as a consequence, we do have a large share-based payment charge each year, but we add it back so that the shareholders can see the underlying performance of the business. EPS grew by 39% in the period, up to 10.67 pence per share, and our dividend for the full year is up by 10% to 10.5 pence per share, and that's an increase of 10% on a prior year that included a special dividend of 3 pence. So what we've sought to do this year is achieve growth upon the larger than normal dividend of the prior year, but we've also restated our dividend policy, whereby we will be increasing the dividend by a minimum of 5% per annum going forward. Our net cash at the end of the financial year was 9.5 million, and that included funds on deposit. And as an indication of how things are going in the current financial year, cash is now up to £12 million today. Moving on to operational highlights, the key event during the year we're reporting upon was the achievement of clearance to sell our high-level disinfecting foam for ultrasound devices by the FDA into the US market. It's a program that we've been working on for quite a few years and has cost us in the region of £3 million to achieve. Well, finally, on the 8th of June, we received clearance from the FDA to sell. We are now in the launch phase of the product, and we're partnering with a company called Parker Laboratories, who manufacture ultrasonic gels, which will be used in the same procedures as our disinfecting foam will be used. And Parker will manufacture our TRISTEL ULT within their manufacturing facility in New Jersey, and they will ship the product out to customers via their existing distribution channels. And we can report in this set of numbers that we have now started to sell, or Parker has started to sell, TRISTEL ULT through distributors into the US market. So it's a very exciting time for the business. We also achieved in the period regulatory approval for our ophthalmic high-level disinfecting foam, and we also recorded first sales of that product within the quarter just ended. So our North American program is well underway now. The majority of our UK and European regulatory approvals for cash are expected to be secured in the current financial year. So here we're talking principally about CE marking and UKCA marking. It's been a little frustrating for us trying to obtain approval via our notified body, BSI, but we know that the technical files are under review and we're receiving questions from BSI, and so we're confident that come 30th of June this year, we will have clearance to sell all of our tank and capsule surface disinfecting products throughout the UK and Europe. And we are also working upon further approvals in other regulatory authorities, such as the TGA in Australia and so on. We have a continuing investment in new product innovations. I'll touch on those as we go through the presentation. But one of the features of TRISTEL is that we are an innovator. The chlorine dioxide chemistry that we work with requires innovation because it comes as two chemicals which need to be brought together at the point and place of use. And as a consequence, we need to have delivery systems, we need to have formulations, and we need to have electronic devices and apps which can monitor and track and trace the process as the decontamination event is taking place. And we innovate and we develop all of these technologies in-house. During the period, we increased our headcount by 10%, and that was in areas such as sales and marketing, but also within regulatory and product development. So the key areas of business growth is where we invest continually. Over the last 10 years of our business, we can show here that our compound growth rate sat at around the 13% mark. And you will see within the graph that we had 2 years of no growth caused by the closure of outpatient diagnostic departments within hospitals, the areas that we focus upon. Well, these are now open again, and as a consequence, our growth trajectory is back on track. We sold £4.9 million more of product during the year just ended than we did the prior year. And we just give a little breakdown there of where that came from. We gained £700,000 as a consequence of currency fluctuations. £2.8 million of that growth came from volume and £1.4 million from pricing. So we do have pricing power, and the increase in pricing that is applicable in this period was 4.5%. So looking at our sales by geography, then you can see that our 14 distributors, they're spread completely around the world, and we saw strong growth across the piece. All areas of the company grew in accordance with our corporate and above our corporate growth targets and hurdles of 10 to 15%. And we can see in Australasia, Hong Kong, China, Malaysia, Singapore, APAC, as we bring them together in our financial statements, APAC was £7.4 million of revenue. Within Europe, those three areas total £13.3 million of revenue. And Europe now exceeds our home market of the UK, which is £12.5 million. So we have a very well balanced geographical picture of revenue, and all areas growing at a good, healthy rate. With respect to sales channels, we sell direct from our own subsidiaries, and then we also have a number of distributors in place. in our two segments of medical devices and surfaces, you'll see that cash is much smaller than medical devices at 3%, but with 3% growth in the period, was growing much slower. But attaining regulatory approvals is the key to igniting progress in that area. And as I say, we're hoping that our cash approvals will come through during this current financial year. Our worldwide distributors contain 3 areas that are all performing particularly well, and they include Ireland, Korea, and Chile. So we have again good geographical spread in terms of our growth areas. We detail on the next slide some tailwinds and headwinds. Those that are positive, so our tailwinds include an increase in diagnostic procedures globally. So we can see an increase year on year of the number of diagnostic procedures that are carried out. This comes from factors such as aging populations needing increased healthcare provision, an increase in diagnostic procedures due to new technologies, so new medical devices that are available to diagnose, and also health screening is becoming more and more available throughout the world and more common for us all to participate in. All of these things push up the number of procedures that take place each year, which benefits us. Every single diagnostic procedure that happens results in the use of a device, and those devices need to be decontaminated between use. Hospitals are selecting more appropriate surface disinfection products, and they're better informed. Our infection prevention colleagues within hospitals are increasingly better informed about what is an appropriate product to use, and subjects such as, or areas such as resistance to disinfectants all feed into our sales teams being able to offer a TRISTEL product which can help those infection prevention teams get a better outcome at the end of their decontamination process. There is, of course, unprecedented concern around the use of pre-wetted plastic wipes in healthcare, and our cash product range feeds into that need by providing a break between the use of the wipe and the chemistry. So we provide chemistry. The hospital can choose its whichever type of wipe it would like to use, and that can be paper, it can be a launderable cloth, microfiber cloth, which means that the use of plastic can be drastically reduced within hospitals. We do have insulation from inflation because of our very high gross margins, and we have very low energy costs within the business, within our manufacturing processes, which gives us some protection from energy cost increases. And we do have pricing power. Indeed, we increased our prices. We do increase our prices annually, and we align those to the global inflation rates. In terms of headwinds, then, as we found with our cash product approvals, under-resourced regulators will slow us down, and that's just a feature of the market in which we operate. And of course, hospital staff shortages, COVID waves, any future COVID waves or existing COVID waves, and also any industrial action, which is a feature, I think, principally of the United Kingdom, they will disrupt diagnostic services and, as a consequence, our revenue growth trajectory. So we have focus upon geographic growth within the business, but we also are bringing a number of new products to market so that we can expand the product range and add some security to the products that we already sell. And the key areas that we're focusing upon on this slide are digital products. So 3T is an app platform. It provides to the user traceability. It demonstrates that the product has been used appropriately. It provides in-use training for the clinician, and it records all steps of the decontamination process. So we provide assurance to healthcare institutions that their medical devices have been decontaminated between uses. And then as we move on to the next product in development, which is our AI program, here we can demonstrate that the product was provided, that the chemical has been provided at the right concentration, that the device was fully covered, and that the contact time of the chemical on the device has been adhered to. And by providing all of these assurances, we demonstrate to the user in the same way that a machine might demonstrate that all elements of the decontamination process have been performed adequately and to the right level. We're also developing a range of products which can provide further assurance by applying colour to a medical device and demonstrate that the user, by removing that colour or by the chemistry neutralising that colour, that the key steps have also been performed. So in every part of our product development programme, we're offering assurance to the end user that the process has been completely performed and totally enacted in accordance with the requirements. During the financial year, we put in place 62 patent applications. So we do provide patent protection as far as we possibly can. 6 of those applications went to grant, and we invested £900,000 in product development and £300,000 with respect to patent protections. And then looking at the North America, again, looking back at our product strategy in North America, then here we can see the various products which we are taking through or have taken through the regulatory process and are now taken to market. They are all our foam-based products. So within each of these images that you'll see a foam-based product, we call it Duo. In the US, we've got TRISTEL Alt, which is a Duo product which is now on sale. Then we have TRISTEL Duo, which is an EPA, a mid to low level disinfectant, which is also on sale. This is for ultrasound equipment. The first one is for the probe, so the part of the medical device which enters the body. The second one is for the rest of the probe, rest of the device. They're both on sale now in the US, and we have orders being shipped as we speak. Within Canada, we have the same product, but this time it's being used upon ophthalmic devices to high-level disinfect, and that in Canada we are regulated by Health Canada, the regulatory authority in the country. That product is on sale. And then Duo Alt, which is principally the same product as TRISTEL Alt. Certainly within the bottle, the chemistry is exactly the same, and the use pattern is the same as TRISTEL Alt. But this time in Canada, it requires a separate registration, and we have submitted that dossier into Health Canada, and we expect approval from there before the end of June 2024. Moving on beyond that point, then within the US, we will take our de novo application that was applicable for TRISTEL Alt, and we will use it as a predicate for 510K applications for TRISTEL OPH and TRISTEL ORL, which will cover ophthalmic devices and ear, nose and throat devices. So as we have in the rest of the world, broadening our use within a hospital through the various departments that carry out diagnostic procedures. And in Canada, we will also make a submission of Duo ORL, which is our ear, nose and throat device, so nasendoscopes, predominantly a high-level disinfectant. So operationally, within North America, we can report now that we are manufacturing products. We've gone through our process validation, ensuring that manufacturing is to the right standard, it's repeatable, and that Parker are able to produce the product in accordance with the FDA specification, which we've completed. So we now know that Parker are and were the appropriate partner for manufacturing our TRISTEL ULT, and they are now making product, inventory is available, and indeed it has now been shipped and invoiced within the US. So we are on track with our operational timelines. And the next steps for us will be for Parker to work with their distribution partners and also hospital procurement departments to list the product on the internal platforms, ordering platforms, so that customers can order the product smoothly and easily. And then in the meantime, both we and Parker have been exhibiting the product. We've been showing it, and we've attended a number of conferences, both infection prevention, but also ultrasound-related conferences. And a few of those are shown on the slide here. So Association for Vascular Access, the Infection Prevention Society within the United States, and the Society for Diagnostic of Medical Sonography. So these are all very relevant to our product, and we are showing the product, or Parker is showing the product at all of these events. And just as a quick reminder, our arrangement with Parker is that they will manufacture and sell. We will attain a 24% royalty on their sales value, and we anticipate that Parker will sell into their distributors at $2 a unit, and the distributors will sell on to end users at $3 to $3.50 per procedure. There's a procedure cost, so we attain 24% of the $2 per procedure, and that will come into the TRISTEL financial statements as a royalty with a 100% margin. So we set for ourselves internal financial targets or hurdles, and the existing hurdles that are in place are to attain a 15% growth rate, sales growth rate on average over a 3-year period, and to attain at least a 25% EBITDA margin. These will be revisited in February this year. Why in February? Well, because by then we should have some real traction occurring within the United States, and it'll enable us to make sure we're setting appropriate targets for ourselves in the coming 3 years. So now just looking at dividend, I mentioned before we have changed our dividend policy. Well, we've moved to a progressive year-on-year dividend. We're increasing by a minimum of 5% per annum. We will link it to earnings, but setting ourselves that hurdle of at least 5% growth year-on-year. In the year that we're reporting upon, then our final dividend will be full year dividend will be 10.5 pence, and that means a final dividend of 7.88 pence payable on the 22nd of December. We have put a slide in here in relation to ESG. So during the financial year, we published our ESG strategy. We were assisted in that by a company called Simply Sustainable, who helped us create that strategy. And we have set ourselves a carbon zero target of 2030. And we have defined the route by which we can achieve carbon zero for our scope 1 and 2 emissions during that period of time. We are carbon profiling all of our key products so that we can make adjustments to packaging to bring in more recycled and more recyclable elements to the product. and also reduce the packing generally, so that we can improve the profile of all of our output. We have recruited, or we're in the process of recruiting, a sustainability officer into the business to help us with what is quite a considerable burden of administration in terms of all of the emissions calculations and so on. And then outside of environmental concerns, but under the ESG banner, we carried out a board evaluation using external consultants, a company called New Role. They helped us with that process. We came up with a number of actions which have now been undertaken. And we continue with our standard staff wellbeing and support initiatives. We've built that out. We further support around key subject matters such as mental health, such as menopause, and so on. And also we continue to support a number of local community initiatives and local youth sports teams and the like to bring ourselves closer to our local environment. So as a summary and an outlook, then we believe, I hope you also believe, that this is a strong set of results on all levels. We are certainly very pleased with the performance of the business over the course of the last 12 months. The global expansion will accelerate now with the Americas launch, but as you can see, it is happening already on all levels. So we are not a one-trick pony. This company is not about North America solely. There's plenty going on in other parts of the globe. We have significant growth opportunities in both of our portfolios. The cash portfolio may not be as large as the medical device portfolio at the moment, but we predict it will be in time. And the business, of course, is profitable, cash generative, debt-free, and we now have a progressive dividend policy. So we view it as having a very exciting future ahead of us. Okay, if I can pass over to questions.
Perfect. Liz, thank you very much for your presentation. What I'll do is I'll just bring your camera back up now. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we received a number of questions throughout today's presentation. And Paul, if I could just hand over to you just to chair the Q&A, then I'll pick up from you at the end.
Thanks very much. So we've got 5 questions so far, and we may get more coming through. But just one question from Peter, who sent in a question regarding finance costs. Given that the company is cash generative and cash rich, why are there much larger finance costs than finance income?
Yes.
Okay. So our finance costs include IFRS 16 lease interest payments, and as many of you will know, that effectively moves the rental payments down the income statement to depreciation and interest paid. Predominantly our leases, our largest leases are our property leases and our motor fleet. So we do incur a significant amount of interest paid via IFRS 16, effectively accounting adjustments. We commence cash deposits during financial year 23, predominantly the last quarter. So at the year end, we had, I believe, one had matured, and we'd accrued around £10,000 of interest receivable. At the year end, we had 2.4 million cash on deposit, and we currently have 6 million. So we are anticipating an increase in our interest received for the financial year 24.
Okay.
Thank you very much. So as a reminder, yes, Heidi Allard, Chief Financial Controller, is in the room, as well as Paul Swinney, Chief Executive. One of the other questions was about what other opportunities are there. Can you apply this to dental, or maybe your products to dental or larger specialist surgical vet practices?
Well, the short answer is yes, we could apply the product to those in those markets, and indeed, with respect to veterinary, then we have had product ranges which take the chemistry into vet surgeries. But one of the conclusions we've drawn is that our business operates best when it's really focused, and it's difficult to take a sales team out of the hospital and put it into a vet's practice. It's difficult to take a sales team and take those individuals into dental surgeries or even into the consumer market, as another example. So we try to be very focused upon the hospital. It's what we know. It's where a high-level disinfectant is most appropriate, and it is actually a necessity. In other markets, I don't think we can say that there's an absolute necessity for HLDs. So we focus upon areas where we believe we can get the largest returns without duplicating our sales teams or our regulatory efforts or so on. So focus is the key word for us.
You talked on slide 12 about how you're going to be marketing in the US, but one investor's asked, how do you expect to displace the incumbents in the US?
Well, it's an interesting question because the incumbent, there is only one, is a device called Trophon, which is a cabinet into which the hospital user will place the ultrasound probe, and hydrogen peroxide gas is pumped in to decontaminate the device, and it hangs there in the box for 5 to 10 minutes, and then is removed for subsequent use upon a patient. Many hospitals will prefer to use machines such as the Trophon machine, manufactured by Nanosonics, but many hospitals will prefer to have a more flexible solution such as TRISTEL's foam high-level decontamination product, and so there's place for both of us in that market. Because the only incumbent HLD is a machine, it means that there is a large portion of the market that is actually not compliant with the regulations. It's using a disinfectant chemical, but it's an inadequate chemical. And so the provision of TRISTEL Ult into the market means that more people can become compliant with the requirements. So we are both filling a gap in the market where no product can currently be used. We're also sitting alongside the incumbent Trophon machine, and in many instances, as we do around the rest of the world where we compete with Trophon, we will find that that hospitals decide to switch from an automated process to a manual process because it provides more flexibility to them. So I think that we can exist alongside and also alongside Trophon and also grow our revenue quite significantly. We estimate that Trophon currently holds around 40% of the appropriate decontamination processes available, so there's plenty of space for us to play in.
Thank you. A question about M&A. Is M&A a possibility to consolidate your position in any particular geography?
Well, we have acquired distributors over time. We have 26, I think, distributors in place at the moment, 26 countries in which we have arrangements with distributors. And much of our overseas growth has come from markets where we have acquired companies which focus almost exclusively upon infection prevention, and these companies were previously our distributors that we've acquired. So that has happened in Australia, in France, Belgium, Netherlands, Italy, Malaysia, Singapore. So yes, M&A will always be a possibility for us. Indeed, during the financial year, we acquired our GCC distributor, who has now bought that business in-house. So we have, there is always the potential. What we have not done so far, and I don't think we have plans at the moment, well, I know we don't have plans at the moment, but I think we would hesitate to do is to acquire another technology, because our chlorine dioxide chemistry has provided everything we need in terms of a high-level disinfectant chemistry. But who knows if there may not be another adjacent technology that might work with the business going forward.
A question from Edward. The story of TRISTEL seems to have been slow adoption of a superior product. At what point do you think there'll be a tipping point where there's a rapid adoption of this superior product? What are the factors that could accelerate this adoption?
Well, I think that, well, I'm not entirely sure I agree with slow adoption. We have had fairly high growth rates at times during our corporate history. Certainly we've been slowed down over the course of the last couple of years as a consequence of COVID. But in terms of rapid adoption, well, the United States helps us provide that, most definitely. So I think that you could be seeing that over the course of the next 3 to 5 years.
A question from Barry. Please tell us more about the competition for your cash product for surface cleansing in various geographical areas, and what percentage of the market you really hope to achieve.
Okay, so our cash product consists of legacy products, which are a chlorine dioxide trigger spray, which we brand Jet, and a chlorine dioxide burstable sachet, which brings the two parts of the chemistry together. They're diluted into 5 litres of water, which can be used for mopping and is often used for damp dusting within a hospital. They make up the £3.3 million of cash revenues that exist at the moment. Our new product range, which is going through UKCA marking at the moment and also CE marking, is the range of products that we refer to as tank and shot. And that's the picture. I think you can see a capsule back on page 2 of the presentation. We'll just flick back. And here we take here we go there. So the hand to the right is holding a burstable capsule. 2 parts of the chemistry are dropped into a tank of water, which is then decanted into small bottles where it can be used to damp dust. It can form a foam, or it can be trigger sprayed onto a surface as a liquid. And this product is then the range, the cash range, can now be used to decontaminate, disinfect all surfaces within a hospital. So floors, walls, high touch areas as listed on the presentation, and can be used by domestic staff, but also nursing staff around close to the patients. Where do we think this product can take us? Well, the use of a surface disinfectant within a hospital is enormous. Every surface within a hospital will be disinfected, will be mopped or wiped. So we certainly believe that we can equal the revenue that we are achieving within our TRISTEL product range of medical device decontamination products with our cash range.
Thank you. I think this is more of a statement than a question, so it may look for a comment rather than an answer. I hope you're not spending too much on ESG, which is very fashionable, but perhaps not necessarily good for business.
Well, that's a view. It's not held by all of our investors. Certainly our institutional investors take a polar opposite view, and so we try to please everybody by engaging with the subject matter. I think we're very, we do hold a view that we're doing something very important with our products, and we want to do that in the right way, and by adopting good practice, by performing our role ethically, with a view to business practice, with a view to the way the board operates, and with a view to the impact we have upon our local communities and the environment. I think that's a pretty sensible approach to business. We don't spend excessively on it, no, but we engage with it because it's an important subject matter.
Thank you. On the finances, the footnotes disclose pre-tax profit from the UK as being 4.2 million. Could the management outline why 80% of pre-tax profit is derived from the UK, whilst the majority of revenue is actually earned overseas?
That's because of our transfer pricing policy. So we do all of our manufacturing within the UK, and we ship all of our product out to our subsidiaries overseas in order to achieve the best tax profile for the entire organisation. We try to keep the profits within the right places, and as a consequence we adopted a transfer pricing policy, which means that profitability in our overseas subsidiaries is set at around the 4.5% net margin. And so the split that you see within the segmental reporting reflects that policy.
What is the patent position on the chemistry?
Okay, so we do have a patent in place, which relates to the creation of chlorine dioxide in a foam matrix, and that patent expires in 2026. There are numerous other patents which go beyond that date, which include creating chlorine dioxide with a wipe in situ. They spread further to the app, the traceability system that we have in place. And now with respect to cash, we have patents around the capsule and the delivery systems by which chlorine dioxide is formed. So we do have ongoing patent protection for the chemistry and for the delivery systems. But patenting is not the only IP protection that we have. The chemistry itself is protected by a trade secret within the formulation, something that only a handful of people have access to, and something that has never been reverse engineered. We've worked with some large organisations, and we're happy with the security of the product. Then we also have a number of, in the thousands, medical device compatibility statements issued by instrument manufacturers, which provide another layer of protection, and a number of published papers and studies that have been performed, all of which provide quite a significant wall around our IP that we feel comfortable keeps us protected.
A couple more questions. Also, thank you to Simon for the statement, who says, keep up the good work on the ESG side. There's a follow-up question from a gentleman regarding cash.
Mm-hmm.
There is clear advantage in using your medical device product as against the competition, but what's your secret sauce advantage when it comes to surface cleaning?
The performance of the chemistry. So it is an extremely powerful biocide. It kills all pathogens of concern, and it kills them very, very quickly. And in the process of doing that, the chemistry itself is extremely safe. It's a skin-safe chemistry, so you can dip your hand in a bucket of solution and it won't harm you at all. You can use it within the breathing zone and it won't harm you. So they're the key features of the product, which make it very suitable for surface disinfection. And of course, we can deliver the chemistry at a price that the incumbent low-level disinfectant is charging out within the hospital. So it has some fantastic features. We're very hopeful for the cash range.
The last questions are regarding estimates for US sales and margins. I appreciate you've already talked about the 24% royalty and that being 100% margin.
Mm-hmm.
But can you address the question of, what's the company's estimates for USA sales? I appreciate you're limited in what as a company you can say, but perhaps maybe you could talk about the Cavendish forecasts that are in the market.
Yes, absolutely. So Cavendish have put out a forecast, and within which they show £500,000 of royalty for 2024, and they also have extended that out to £1.4 million of royalty in 2025. So that is the 24% of of Parker's revenue out to their customers. So we are expecting, well, Cavendish are expecting quite fast uptake and quite a significant market for the product.
Thank you. That's the end of the questions.
Okay, thank you very much.
Perfect. Thank you very much. I think you've addressed all those questions from investors, and of course, the company will review all the questions submitted today, and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, Liz, could I just ask you for a few closing comments?
Yes, thank you very much. Well, it's a great pleasure to present to you all today, and I hope you'll be as pleased with the results as we are. We will have a next trading update. The next scheduled trading update is at AGM on the 19th of December, and I hope we see many of you there. Thank you very much.
Perfect, Liz. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of TRISTEL PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.
Thank you.